Why do half of small businesses fail within 5 years? Well, there are many reasons small businesses fail during those first 5 years, and that 25% of small businesses don't even make it past their first year. Reading about many public companies we hold in our portfolio, having an MBA, and running my own small business for over 30 years now, I can generally spot when a small business probably won't make it. Now, there are 7 key points I've noticed when it looks like a small business will not make it. Number one, very simple, is closing too early. I just went to a new business on Rancho Penasquitos last Saturday, and we had to hurry up because the woman said they're closing at 2 o'clock. I asked the woman, I go, why? She said, well, they did not know. I said, that's such a shame. The parking lot is filled with cars and people that are walking by your business. I've also seen employees in small restaurants telling their customers, well, we'll be closing in 30 minutes. Well, gosh, if that isn't a welcoming feeling, I don't know what is. The third thing on my list is no or very little training for employees. When I was recently at that business in Rancho Penasquitos, the woman that was there knew only the name of the equipment, but she had no idea how it worked and didn't even know how to use it because she didn't use it herself. Number 4 on the list is no advertising. I gotta tell you, this one just drives me crazy, as every business should have an advertising budget that should be at least around 10 to 20% of the revenue. How are people going to know about your business if you don't advertise? Number 5 is placing yourself on too tight of a budget. If you do silly things like keep electricity low and your business is dark, or maybe you order cheap products, it hurts the consumer experience. They get that one time, it's like, oh, it's terrible, that's dark, terrible business. Customers can also tell if you're trying to keep your labor costs down by not having enough workers, and that can really hurt when that rush comes along. Consumers will remember the poor service that they received, and they likely won't come back and tell many friends how bad the service was. Number 6 is starting a business without the proper capital and thinking you can run a business on a shoestring budget. Make sure when you start a business you have plenty of capital for things you can plan for, but also things that you didn't plan for. Last on the list is to be sure to pay up for good employees. These employees represent your business, and if they are not happy or you don't pay them well, you'll get low quality employees that are dissatisfied, which customers can see from their bad service and that bad employee's attitude. As I said, there are many other factors as well, but these are some of the big ones I've noticed recently. Remember, if you start a business, you'll have to be at that business probably 60 to 70 hours a week for at least a year or two. And don't even think about going on vacation. If you can't commit to that type of time for your new business, buy a good quality stock. Instead, that pays good dividends, and you'll have no worries and enjoy your free weekends. I'm Brett Wilsey with Wilsey Asset Management. If you like these videos, be sure to get a like or comment, and feel free to check out your other YouTube videos and weekly newsletter for latest economic news, expert analysis, and market insights.